The following episode was recorded on March 8, 2020, 2 weeks after the big Wall Street sell-off started. We'll be back next week with a new episode of our podcast, in which we'll explore my algorithm, The Machine, in detail, focusing on price movements in Bitcoin. Hi everybody, welcome back to my channel. Now I'm supposed to tell you how I made $1 million on the stock market in the worst week for the stock market that it had seen since 2008. Well, basically, I trade options. So options are like, I don't want to get too technical in this episode. It was actually pretty easy. It was like picking apples or something. I mean, I knew it was going to go down. I could see that it was going to go down. I knew it was going to go down. I just knew it. So once it started to go down, then I felt safe to get in. I buy something called TQQQ, which is a exchange traded fund, an ETF. Exchange traded funds are like baskets of stocks, or like some market maker, somebody with a lot of money has set this fund up. So if the stock market does a certain thing, they pay you a certain amount based on that. ETFs are in a really volatile market, potentially risky because you're depending on this market maker to pay you. So I don't think we're at that point yet in stock trading where we're in that much danger that these guys are going to go bankrupt or something. But that's my favorite way to make money because I figure, let's say you know the market's going to go up. You can buy a stock, and the stock might go up or might not with the market. You can buy an ETF that's based on the stock market, and let's say the stock market goes up 1%. The ETF will go up 1%. So the QQQ is based on the NASDAQ stock market. If this NASDAQ stock market goes up 1%, the QQQ is supposed to go up 1%. They do their best, and it's pretty close. If you buy the TQQQ, the NASDAQ goes up 1%, it's the triple QQQ, you get 3%. That's why I buy the TQQQ. It's more risky. If it goes down, you lose 3%. That's the ETF. I buy options. I buy call options usually. That's why this is the Call Girls Investment Club. A call option is like a bet on something. It's like sort of like it's like an insurance policy. So instead of buying a share of TQQQ for $80, I'll buy an option. In 30 days, I want to buy TQQ at a certain price, and I'll pay about 10% for that. So I'll pay about $8. So instead of being able to afford a certain number of shares of TQQQ, I can buy 10 times as much if I buy options, which means I can make 10 times as much the money. Okay, so the NASDAQ goes up 1%. TQQQ goes up 3%, and the option I bought goes up 10 times that, so that's 30%. So 1% up is 30% in my pocket. That's why I buy options. A call option is betting for the stock. I usually buy call options or sit it out, but I saw that the market was going to go down. I knew that the market was going to go down. I knew this because I had been checking news day and night. I wake up every morning at 5:45 and I listen to CNBC. I listen to the intonation of the voices, the words, all the opinions. I kind of coagulate them in my brain, you know. And then at 3 in the afternoon, I try to listen to Jim Cramer's opening speech at least, the first 10 minutes, see what his mood is, what he says is going to happen, if he has any general ideas like stay out of the market. I stay out of the market. You know, I try not to cross what Jim Cramer says because he is an expert who has access to CEOs, access to money managers. He has information coming in. He's there every day. This is his job. I will never have the knowledge that Jim Cramer has. So I'm listening to the announcers in the morning. I'm listening to him in the afternoon. I'm collecting all their information into my brain. I'm using logic. I'm using my imagination, and I'm using experience, and I'm also using the chart. If the chart's going up and down like this, and then it goes up, and it's got this pattern, if I see a pattern, I kind of go with the pattern too. So all these things combine for my decision making. So let's say I think the NASDAQ's going to go up. I'll buy a call in TQQQ and I'll get 30 times whatever the NASDAQ goes up. I knew the NASDAQ was going to go down. I knew everything was going to go down, but particularly the NASDAQ, because the NASDAQ stock exchange has a lot of the high-flying technology stocks, and they seem to swing way up and swing way down. So how do you bet against it? Instead of, and I do very simple option trades. I don't do butterflies and, you know, all these crazy things. I don't have actually time to learn that right now. I'm just trying to keep my family going, you know. I'm a mom, so, and I'm trying to do simple things. So instead of betting against instead of buying the SQQQ, which is the bet against the NASDAQ, I feel like there's not enough shares of that traded. It's not as popular as the TQQQ, so instead of buying the SQQQ options, I bought a put on the TQQ options. Put is betting against. Imagine putting it in the ground, like killing it, versus calling it to you if you believe in it, or putting it away from you if you don't believe in it. That'll help you remember put and call. So I bought a put in TQQQ. And of course, it went way down. It went phenomenally down, like 10%, the first bet I made. So so when the market went like 10% down, I must have made like 30% on my bet. And instead of just staying in my option, I was so afraid every night that maybe the stock market would change its mind. You know, it's made up of computers trading stocks. It's made up of money managers saying, hey, it went down today, it should go up. You know, this is undervalued, let's buy back in, let's buy some more. It's made up of home gamers, people at home trading who are just like, oh, it goes up and down. It went down, it's going to go up. So they'll buy, you know, and all these different types of personalities are determining where the stock price is going. So you kind of have to figure out what the personality is that's trading right now. When it gets really bad, like it is this week, a lot of those home gamers might be out of it. A lot of money managers are kind of like selling and saying, well, why get back in right now? We're waiting. The money managers are waiting for something. They're waiting for a big crash down, a big, gosh darn, I'll just put the name of it on the screen. I don't know. I published it multiple times today. I'm kind of tired. They're waiting for capitulation. What is it called? Capitulation. I got to look at my own post and see what I wrote. I can't believe I write about this every day and I can't remember the word. Here's the word right there. They're looking for a big decline down. A big decline down. They will not buy more stock until they see this big washout, this big capitulation downdraft with a lot of volume, a lot of shares traded, and it's got to be big. Otherwise, they're not going to accept it as the bottom. Many people have come on CNBC and said this. So what's big? Well, if every move in the last week has been 1,000 points up, 1,000 points down, 1,000 points up, 1,000 points down, what's big? That's every day. Big would be 2,000, 3,000 points down. So everybody's kind of waiting to get back in for at least something like that. So that's why I'm firmly convinced we still have a big move down coming. Will it go up before the big move down? I don't know, but there's another factor. We're right now at the level of, this is Friday, this is March 6th that I'm recording this. We're at a level of 2,950, just about. That's like exactly the level where everybody's waiting to see, is it going to go down from here or up from here? This is like the last time it went down, it went this far. So is it going to go down farther? Or is it going to go up from here? So the people who watch these charts, they're called technicians. And the technicians are all pretty much saying, hey, this is a technical level. If it goes down below this and maybe closes lower, which I thought it was going to do today, so I bought in early thinking that was going to happen, but the some members of the Fed came and tried to rescue the market by talking about things. In the last half hour of trading, they said, oh, we'll do whatever it takes. It's going to be a big effort to save us from this virus economically, you know. So that made the market go up at the end, and just barely made it. We were well below that mark. So that's why I thought it's going to plummet from here. But they managed to talk it up, and the market went back up in the last 20 minutes. So if it closes below this technical level, then it'll just keep going down, like big. People will say, oh, there it is, it's breaking, and they'll all like panic. So that is more logical in my mind than going up from here, because what's going to happen over the weekend? What are the numbers going to do? 15,000 test kits get sent out every day now. Do you think we'll have more people diagnosed with coronavirus? Yeah, I think it's a good thing. We still have 11 people dead, but now 15,000 people sick, so then the death rate's going to be 11 out of 15,000 maybe in people's minds. I don't know. The other bad thing is that there's a nursing home that's infected. That's where the big outbreak started. Nursing home's going to have a high death rate. So people are going to see that and do calculations and say, oh my God, like half the people are dead, you know. Maybe 2/3 of the people will die in the nursing home. I don't know. So there's no real good news that I can foresee happening. The only thing I think would be really good is if the bond rate were going up again. The bond rate going down is what's freaking everyone out. The treasury bills that the US releases for sale to the rest of the world, to anybody who wants to buy them, the safe investment, they're only paying like 0.7%, 0.7 of 1%. And the reason that is because as the prices bid up, the amount it's paying per share is less compared to what you paid for it. So the only thing the US could do is release more bonds. If they released more bonds for sale, war bonds against coronavirus, if they did that, they could use those bonds to fight coronavirus, use those bonds to pay off the national debt, get a great deal, get people paying top dollar for their bonds, and dilute the bond market enough that maybe the prices on bonds would come down, supply would be up, so demand would stay the same, and so the prices would come down, and that would mean the interest rates would come up a little, and then the stock market would be relieved. That's the only thing they could do this weekend that I think would really make a difference. I tried to tweet it out there to anybody I could get to listen. I'd like that to happen, but I'm betting against the market, so I don't think it's going to happen. So I have a bet against TQQQ right now with a put. I have gold. I have NUGT, which kind of goes with the market sometimes because people try to take their profits to pay for their stocks that they're losing money on. So I have Nugget. I have UGL, which is sort of a leveraged gold vehicle. I have physical gold, and I'm about to invest in silver, which is going to catch up with gold. I saw this in 2008 when we had that big rise in gold then with the crisis, and silver later, after gold got really high and some people couldn't afford gold, they'd start buying silver, and then silver would whipsaw up to catch up with gold. So silver's my next investment on Monday. So anyway, I feel like I'm in a pretty good position. If we have a crazy, great day on Monday where everyone's going crazy and saying, the coronavirus is over, I just think that's a little unlikely. But if it goes up, I don't know, I might sell it, or I might just hold on to it and wait, because I feel like in this environment, whatever goes up must come down again. But that's how I basically made $1 million last week, in 1 week. I actually got to the level where I made so much money, I couldn't remember how much money I had in my account. It was too many digits, too many numbers, and I'd have to keep looking, and I just didn't get it in my head what the level is I reached. I made a couple bad trades this week, so I'm below that, whatever it was, because I kind of got swept up in the whole upswing of the market, and for a while I actually believed it. I posted to everyone, don't believe it, and then I fell for it. It's kind of hard not to go with the herd, you know? So it's a really psychological game. You have to maintain your control, your discipline of what you believe, but at the same time you have to be open to everything. So it's kind of hard to separate those two. But if you do that, you can be a psychic too. Check out both of my channels. I have Call Girls Investment Club, which tells you more technically how I'm trading and about the stock market. And I have Tesla Chick Life, which just tells you my psychic stories. And, oh, I got one more psychic story. I'll have to do another episode.